Hello and welcome to Looking at the Markets with David Modell. Today I want to give you two principles which are really simple. In fact, they're only 3 words each. That's how simple these ideas are, and yet I believe that you can apply them to your trading immediately. And they're very important. In fact, I think this is going to be a very important video for you. I'm glad you're watching this, and feel free to share this with other people. So first I'm going to give you some background as to what you're looking at right now. This is TradingView.com. It is Apple stock, the 1-minute candlestick chart. Each candlestick represents 1 minute of price action. But the principles I'll be talking about today, it doesn't have to be for stocks. I might say stock, but it could be for cryptocurrencies, whatever. Okay, whatever you're trading. And I've got 2 lines here, a purple line and an orange line, as you can see. And it's just 2 moving averages. All right. So the purple line here is the 10-period EMA, exponential moving average, and the orange line here is the 20-period EMA, exponential moving average. All right. So you got the 10-period EMA and the 20-period EMA. And so let's say you're using a really simple strategy. You don't have to use this strategy. What I'm going to say today can apply to any strategy, really, I believe. But let's say, just for the sake of example, you're using a strategy where when the 10 EMA, the purple line, is above the 20 EMA, the orange line, then you're long. Okay? When the 10 is above the 20, you're going long. You're a buyer. And let's say if the 10 EMA is below the 20 EMA, you're short. Okay? You're going short. So again, just for example, if the 10, the purple, is above the 20, the orange, you're long. If it goes below, then you're short. All right? So a very simple strategy, just as an example. So the first principle I want to tell you about is, it's just 3 words. Don't predict, react. I'll put it another way. Reacting, not predicting. All right? You want to focus on reacting, not predicting. Reacting to what you actually see. Reacting to the actual data. Reacting to what's actually happening. Not predicting. All right. When I'm coaching students, a lot of times they'll tell me that they think that Apple is going to beat earnings or whatever. And I tell them, I think you're doing too much predicting right now. Let's see if we can reduce the predicting and just react to the data that you actually have in front of you. So let's take a look at what this might look like as a trader. All right, so you got the 10 above the 20, so let's say you're long using the strategy. And look over here. It looks like the 10 is about to go below the 20. So you're about to go short, right? Well, you don't know that. That's predicting. When you're saying, it looks like the 10 is about to go below the 20, that's called predicting. You're not reacting to something you actually saw happen. You're predicting what you think is going to happen. And human beings are terrible at predicting. We're the worst. Okay? So, you think it's gonna go below and you're gonna go short? Really? Okay, go short. Let's see what happens. What you thought was going to happen didn't happen. And when you took that short position, now you're losing more and more and more. Not good. So don't predict, react. Okay? If it actually crossed below, if you saw it happen and you reacted to it by going short, it could have been a very different story. All right? I'm not saying you're going to lose every time you predict. Sometimes you might be lucky. Sometimes you might win. But don't count on it. All right? So try to eliminate predicting from your trading as much as you can. Can you eliminate predicting completely? No, I don't believe so. I believe that anytime you go long, you're predicting that the stock or whatever it is you're trading is going to go up at some point. And if you take a short position, then you're predicting that it's going to go down at some point, right? Otherwise, you wouldn't have placed that trade. All right, so that is the first principle. Now, the second principle is trusting, not thinking. Again, it's only 3 words, all right? We could put it another way, still 3 words. Don't think, trust. Now, that's only if you have a really good system in place. If you have a great trading strategy that you've tested out, okay, you back tested it, you forward tested it. By forward testing, I mean you virtually trade it or demo trade it, right? Not with real money. And you tested it out for a while, a long time. And if you're able to back test it, then great, that's even better. And you decided this is a really rock solid trading strategy. You like it a lot, and you've demonstrated that it works consistently. Now you're ready to use it. Now stop thinking about it and trust your system. Trust it, okay? Now, don't trust it until you've researched it first, like I just talked about it. You back tested it, forward tested it. You have some sort of exit strategy in place where you're not going to lose too much if it goes wrong, right? That could be a stop loss. It could be the moving averages taking you out of the trade as soon as it goes against you. Whatever it is, okay? You have some sort of way of not losing much money if it goes wrong, right? You have all these things in place. You have a profit target in place. You have your entry points. You know why you're placing every trade. All right, but once you have a great system in place, you got to trust it, okay? Don't trust it while you're in the research stage. That's when you're testing, not trusting, right? But once you decide this is the system, this is the strategy, then trust it. Don't think so much. Just use it, okay? So, once again, let's say this is your strategy. Let's say you tested the heck out of it and you have an exit strategy and all that good stuff. Okay. So, you're waiting for the purple line to cross below the orange line and you want to go short when that happens. Well, am I doing it here? No. Remember the first guideline I told you about? Don't predict. Just react when it actually happens. Oh, I think it's going to go below. No, you don't know that. But there, I actually see it below. I see the purple line below the orange line. Okay? So now I'm going to react. Take a short position, right? If that's your strategy. But wait a minute. Some people, before they take that short position, they think, oh man, I don't know if I should. Maybe there's not enough volume. Maybe it's not the right candlestick shape. Look, if you really, truly, thoroughly researched a strategy and you're satisfied with it and you like it a lot and you have an exit strategy and all that stuff in place, now it's time to trust it. Don't think, trust. Trusting, not thinking. You take the trade. Just take it. Take a short position. There you go. Okay? If you didn't trust it, then you wouldn't have been able to take advantage of this short trade. All right? That's only after you've really proven and demonstrated to yourself, to your satisfaction, that it's a good, rock-solid strategy where you can't lose too much because you have an exit strategy, you know your profit targets, you know why you're taking every trade, you tested it out backwards and forwards, all that good stuff. Okay? So those are two principles for you. Super simple, but super important. And you can apply them. Doesn't have to be 1-minute candles. Can be even for longer term trading. Okay? It could be for hourly candles, even daily candles, whatever it is. All right? And pretty much any system, I think, can benefit from these ideas. I hope these are helpful to you. I want to thank you for watching and listening to this. Please feel free to spread this video around to people who need it, because there are too many people doing a lot of predicting when they shouldn't be, and too many people who have a great system and they're thinking too much. They're overthinking it. They're not trusting it like they should be. Thank you so much for watching. Thank you for listening. I will talk to you again soon.